chart don't click. You move so slow, they making me sick. You drip so dry, it sparked a drought. While I got Wall Street begging me to bail them out. You're making moves like you're trapped in quicksand. I'm swinging deals like I own the whole land.
Crimson, you ain't nothing but a bad investment. Your whole portfolio's a joke full of stress and resentment. Talking big, but your trades don't hit. I'm taking profits off moves you don't even commit.
You thought you could flex, but your move's been weak. While I'm moonwalking profits every time I speak. You're looking like a bottom tier wannabe king, but I'm pulling in numbers that make the market sing. Velvet Kohrs,
Ooh, he's smooth, baby.
richer than your daddy's dirty divorce. Velvet Kohrs,
That silk talk.
I don't walk past money I endorse. Velvet Kohrs,
Say it twice if you're nasty.
every trade I make got your mama off course. Velvet Kohrs,
Now watch me turn that weak ass chorus into mulch, of course.
you're still searching for the buy button, looking real slow. While I'm out here investing in everything you don't know. Your text all outdated, your game's been sold. I got crypto coming in, your stock's still on hold. Try to ride my wave, better learn how to swim. Cause you're drowning in losses, I'm taking it all in. You a trend that's already over, boy, I'm the future of, well, you're just a red line. Well, I'm the whole market's hell. Velvet Kohrs, let that name ring. I'm the dividend daddy, the profit king. Velvet Kohrs, that groove so rude. Cutting egos cleaner than a fresh hairdo. Velvet Kohrs, shut it down, baby. Turn that crimson boy to a mutual fund ghost. Velvet Kohrs, now excuse me, I got yachts to post. Velvet Kohrs, the king, baby. You're still stuck in your mama's basement. I'm out here living free. Velvet Kohrs, yeah, it's my time. While your stocks crash, I'm stocking up the prime. Velvet Kohrs, Vellum Velvet. You ain't a king crimson, you just a pawn in disguise. Velvet Kohrs, I'm the Wall Street myth. Why you just a damn lie?
Oh, brother, oh, brother, oh, brother. Good morning, good morning, good morning, and welcome back to another episode of the Matt Kohrs Show. It is a beautiful Tuesday, April the 15th, and I hope you guys are ready for another one. Yesterday, we kind of violently went nowhere thus far in pre-market trading. Once again, we are violently going nowhere, but maybe, just maybe, we're actually going to get a bit more excitement today. It is the day before volatility expiration. Remember those VIX contracts, VIX, the volatility of the S&P 500, those will be expiring tomorrow morning. And it's always kind of important to pay attention to that. But I would say today, it's more than normal important just because of how many contracts are currently live. So we might see some excitement. Fingers crossed. Obviously, no guarantee, but maybe, just maybe, we actually have something a little bit more exciting than yesterday to pay attention to. On top of that, we have some earnings to get into. So, of course, we'll be breaking that down. We did hear from other large banks today. We have an interesting update related to the world of semiconductors, more specifically NVIDIA and Trump. And then, of course, while speaking about Trump, it's really hard right now to not talk about the most recent developments in the world of, I guess, the trade war, the tariff war, the fentanyl war, like whatever you want to call it. Obviously, we have to chit chat about that as well. So we're going to rip through all that in the morning. Then I'm going to spend a little bit of extra time really focusing on what we're seeing in the options market, what we're seeing in the positioning, obviously, because we are in a monthly OPEX this Thursday. Remember, the markets close Friday. So we're going to look at the shifts of what is happening there, what's not happening there. I'll give you a quick reminder of, obviously, seasonality, what to pay attention to for the remainder of the week. We have Jerome Powell speaking tomorrow. So we have a couple things just to get all ready for the day. But obviously, before we do all that, that's going to be the show. Obviously, eventually that bell's going to go ding, 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 ding. Then we have to put on our DGen hat and see if we can make some money. So hopefully that's going to go well. But obviously, you guys, you guys are right. You guys, Velvet Kohrs, yeah, a quick round of applause. It's always nice that he can stop by the studio so early in the morning to serenade us with such beautiful music. So yeah, you guys are 100% right. We should be thanking Velvet Kohrs. That's actually straight up rude of me that I had not. So yeah, no, you guys are 100% right, and I appreciate you for correcting the error of my way, if you will. So thank you. And with that being said, let's get rocking today. U.S. stock futures are little change after the S&P 500 posts back-to-back gains. Yes, we did have back-to-back gains. We're in this situation right here where early this morning a bit green, a little bit later, a little bit more recently, we were a little bit red, and now we're pretty much just at that closing value from yesterday. So not much going on. In terms of a momentum, pretty much neutral. We were a bit bearish, like I said, around 8:15, but we're popping back up. The 30 minutes trying to hold green. The 4 hours definitely green. Same thing on the NASDAQ. We got a little bit of a hit, but bouncing back. 30 minute, once again, pretty much neutral all the 4 hours. So not much is going on early this morning. So I do think we're going to see some action today, and I guess I want to take it from two different approaches, if that's cool with you. I want to talk about the bear case, the bull case, and how both sides have something very fair to argue. So if you've spent any time doom scrolling on X this morning, you've seen this, the death cross. And apparently the last time we saw that was March of 22, and we saw it. And granted, even when it crossed, we saw a little bit of a bounce in price, and then it very much did sell off. Eventually, we got the golden cross when it crosses back over. And when I say it, I'm just talking about the 50 simple moving average and the 200 simple moving average. When the 50 crosses above the 200, that's referred to as the golden cross. When the 50 crosses below the 200, that's referred to as the death cross. And that's what we just saw as of yesterday. So yeah, everyone's talking about it like, Jesus, we're going down. And there's good and there's bad. So there's various things I want to talk about. And I think right now, whether you're a bull or a bear in the short to medium term, there are very fair things that you could argue. So let's go like all of it. Obviously, from a technical perspective, this is one thing that the bears could argue. Be like, yeah, dude, death cross. I mean, listen to the name. That doesn't sound so good. But then on the other side, we all know that this is prompted by kind of the market's uneasiness with the trade war and specifically what is happening in the bond market, and everyone's paying attention to the 10-year yield and all that. So on that side, we are getting some tensions that are simmering down. According to JD Vance, there's a good chance of a UK-US trade deal as Trump really loves Britain. So we're getting that update. All right. And more so, it's not like the UK is like a large trade partner of ours, but we are seeing this general sentiment of Japan wanting a deal, Vietnam wanting a deal, Argentina wanting a deal. We are seeing, I mean, there's tens and tens and tens of countries who are already stepping up saying, we want this deal done. In fact, I would say the only major influential country that like right now we have a clear sticking point, as you guys all know, is obviously China. But beyond that, pretty much everyone's coming to the table saying, hey, we want to use this 90-day somewhat of a pause. I can't call it a straight up pause because remember, everyone's still at 10% at minimum. So it's not like everyone's at zero. It's just everyone's still clocking in at 10. But beyond that, it's just China. So everyone's trying to use this 90-day somewhat of a pause. I'm using that term loosely to try to get a deal because obviously you can see all the havoc that the current situation is really prompting. So on top of that, we had Bessent, Treasury Secretary. I don't have definitive information on this, but if you ask me, this is the guy, the brains behind the current operation as it does relate to what's going on with the trade war. Bessent, like this is a guy who he really, what's the saying? He cut his teeth back in the 90s when he helped Soros topple the pound. He was doing some pretty crazy stuff around 2013 with the yen. This is a guy who intimately understands what's going on in fixed income, bonds, yields, currencies. This is what this guy does. So like I said, it's not like I call him up and I'm like, oh, are you the guy like really orchestrating this trade war right now? No, I don't have his number. We've parted ways. We don't chit chat anymore. But looking at this guy's body of work, the current Treasury Secretary, I don't think it takes much of a mental leap to realize that this is the guy that really intimately knows what the hell is going on. But anyway, he was right here. He had some commentary yesterday that I would say was a little bit more bullish than bearish. Here's what he had to say about the VIX.
Maybe some of that uncertainty starting to evaporate.
Yeah, if we measure uncertainty by the VIX, I think that the VIX, I don't want to make market calls, but I think that the VIX spiked and is likely peaked.
Maybe some of that
So right there, I mean, and once again, well, I can't even say that. I would say that his fortune telling ability probably is better than ours. I always like to joke that like my crystal ball is broken, currently getting another one shipped from Amazon. And I was going to say that about him, but in reality, he's kind of in the driver's seat. So it's more of like what's going on in his mind. And he clearly has quite a bit of influence. So when he's saying that the VIX is most likely peaked, is it a guarantee? No, obviously we live in a pretty chaotic time, but it does have some pretty positive sentiment. And I'm bringing this up because obviously, as I alluded to at the start, the current VIX contracts, they are expiring tomorrow morning. As in today, there's going to be a lot of decisions made with VIX, and I could show you guys this in a second, but just take my word for it. Right now, there's quite a bit of negative gamma in the VIX between 25 and 30. I guess while we're here speaking about the VIX, between 25 and 30, this tranche right here has quite a bit of negative gamma. Remember, with negative gamma, when you get going in one direction, it really gets going in that direction. So there's a bit of positive gamma right here at 30. So if the VIX today can actually come below that, I would actually expect a pretty quick drop, maybe all the way directly to 25. So remember, with negative gamma, it's not bullish, it's not bearish. It just means whenever you get going a particular way within that zone, you can really get going that way. So with that being stated, and the fact that we know it, that's a negative gamma zone, we know a lot of volatility VIX-based calls are going to be expiring tomorrow morning. So that's going to be taken off the table. And remember, when VIX comes down, there's an inverse correlation with the overall market, which if that were to play out, at least in the short term, that would actually be bullish for the overall market. So kind of interesting that we're getting the commentary from the Treasury Secretary right before the expiration. So generally we should pay attention to it. I know even on this show, once in a while, we just don't care because a lot of the times there's not just that many big bets on the VIX. But obviously this time around is very, very different. So kind of the double whammy. The Treasury Secretary saying the VIX is spiked. And then for us, the current timing, we know that VIX contracts expire tomorrow morning. Today, there's a lot of negative gamma beneath us. So if it starts to drop, it can really drop, which would most likely be I shouldn't say very bullish. It would most likely have bullish positive influences on the market. So definitely something to consider into today and really tomorrow's trading action. U.S. announces probe into chip electronic imports, paving the way for new tariffs. So I would say one of the biggest developments over the past, 48, 72 hours relates to the world of semiconductors. And we're getting a lot of updates there. South Korea announces over $23 billion for chip sector as Trump tariffs on semiconductor imports loom. We know that TSMC is building a whole nother plant in Arizona. It seems like day over day, we're getting another update. And the big one recently was NVIDIA saying, hey, we're going to do $500 billion for manufacturing in the U.S. And then we got clarity on that from Trump this morning. NVIDIA commits $500 billion to build AI supercomputers, plus in the U.S. exclusively. This is very big and exciting news. All necessary permits will be expedited and quickly delivered to NVIDIA, as they will to all companies committing to be part of the golden age of America. So not only is NVIDIA committing a large amount of capital to the U.S. right there, I think it's interesting that it's an exclusive deal, as in really you're not going to be building elsewhere, or Trump will probably pop off in one way or the other. But we're seeing this as a trend. South Korea, TSMC, the list just really does go on and on and on. And then the final sentence, as they will to all companies committing, as in, hey, the door's open. If you say you're going to build out some of this higher end semiconductor tech here, we are basically going to just fast track you. I would assume that these permits, it's probably just Trump's going to come through and just rubber stamp. It's probably going to be one of the easiest times to build this stuff out in quite some time. This type of stuff, to my understanding, the permitting takes way longer than the actual build out. You could just be caught up in paperwork forever and ever and ever. And it honestly honestly does sound like Trump and the administration and the current goal is just to do it as fast as they possibly can to get people to actually start building, to get these companies to actually start building. But we're seeing Meta, Facebook, they're committing a ton of money. Microsoft, SoftBank, and like the list, OpenAI, it just goes on and on and on. So it'll be interesting. It's already interesting now, seeing how much the initial steps have gone the way of really clearly Trump and what Trump wants. But it'll be interesting to see how long it really takes, and when is it going to be reflected in the company's earnings? When is it going to be reflected in the U.S. economy? What's the impact going to be on jobs? So right now, I think that would be on the side of bullishness. Obviously, I know from the technicals that we have a little bit of a death cross situation. In the very short term, we have an interesting setup with the VIX, but I also should note, unfortunately, this monthly, as the monthly contract, as in going to this Thursday, remember the market is going to be closed this Friday in observation of Good Friday. A lot of support is going to be disappearing from the table. And when I say support disappearing from the table, I mean, we had a lot of protective puts, like a lot of sold puts that were giving us these nice floors in the market that unfortunately a good chunk of them, not all of them, will be disappearing this Thursday. So on the side of the death cross bearish people, if we start to like kind of roll over, if we don't see fresh calls coming into the system and we start to roll over, unfortunately right now, like that protection, it's leaving. So of course, on any given day that could change. And maybe a lot of people, as soon as it rolls, they sell puts, and maybe it is being reconstructed and it could happen as early as today. But as of this morning, as of me prepping for this show today, that could very easily disappear. So be careful on that. And then also maybe conversely, pay attention to see if more aggressive things are coming in on volatility and people are betting on it popping again. So trying to be balanced here. Obviously, coming into the day, I am biased because of my own position. I do have a bullish position. And the main argument for my bullish position, I would just say I'm looking for this upside gap fill at 5572. That's the major thing I'm looking for. And I think that this could play out very nicely, especially with potentially VIX coming all the way down to 25. Ideally, that would happen today so I can lock in my gains and move on to the next play. So I kind of also just want to be honest and transparent about my own bias, but attempting to, I guess, be self-critical, I do see the bearish argument here as well. I think the bulls in the very short term have a stronger argument, hence why I'm putting my money on that side. But right now, I think if you are looking at this market and you're saying it has to be absurdly bullish or it has to be absurdly bearish, like you're just really not thinking that hard. You're really not looking that hard. And maybe you are being biased to your own position, because right now I don't think it takes much of a mental stretch to argue the bull or the bear side. I think both sides do have a compelling case. I personally give the favor a little bit more to the bulls just because it seems like tensions are simmering down. We're not seeing such aggressive put buying. We're seeing vol come down, and really we might see a vol collapse today. We have commentary from the Treasury Secretary saying VIX has spiked, but on the other side, we have the death cross. We have a lot of our support disappearing as of this Thursday. At any random moment, there's so much uncertainty. You don't know what Trump's going to say on True Social, or what member of the administration is going to give a rogue interview and say something that catches us all off guard. So if anything, yeah, you might be able to argue bull or bear until you're blue in the face, but I think we could all agree that uncertainty is on a historic basis still pretty freaking high. I do want to remind you, tomorrow, Wednesday, the 16th, there's nothing really scheduled today. So fast forwarding to tomorrow, we get retail sales early in the morning at 8:30, and then Jerome Powell will be speaking at 1:15. We will be doing a specialty stream for this. The chairman of the Fed, Jerome Powell, 1:15 tomorrow. So whose side is he going to be on? He recently just found out, like literally breaking news as of yesterday, once again, coming back to the Treasury Secretary, it looks like they're going to start interviewing people to be the new Fed as early as this fall. So maybe Powell is going to be petting. He's like, all right, if I'm out of a job this fall anyway, like why wouldn't I just kind of really say what I want to say? So, or maybe he's going to be the adult in the room and say, you know what, it doesn't matter. A job's a job, and I'm still going to do the best I possibly can at this one. I have no idea which way it's going to break, and I don't think necessarily anyone does unless you're a person intimately involved in the process. But anyway, that's all going down tomorrow. Thursday is the last trading day of this week. Remember, the market is going to be closed on Friday. So Thursday, April 17th, 14th. We have some stuff in the morning, but more importantly, this is going to be the monthly OPEX. Don't forget, we're also in earnings season. This morning, we heard from Johnson & Johnson, Bank of America, and Citi. J&J's earnings beat as pharma, excuse me. Interesting thing about J&J is at any moment we're expecting to be hearing about new pharmaceutical tariffs. So on that one, I'm not really, I know some of you like to trade these pharma stocks, especially the small cap ones, because when they get moving, they can really get moving. I personally feel like I have no edge within this sector just because it's not really what I care about. It's not what I'm knowledgeable about. I understand you could play some of the bigger ones, and yeah, maybe it's interesting, but I have to be honest, I find tech stocks to be way more interesting than something like J&J and Pfizer and Moderna and whatever. I get that they were all the rage for good reasons back in 2020 and 2021. So I wanted to cover it just because I know it's a large influential company and I know some of you guys are trading it. It's hard for me to give a shit about them if I'm being completely honest. I do get more interest out of ones like this. Bank of America tops analyst estimates on better than expected interest income and trading, pretty much going the way of all the major financial players right now that have trading desks. They're all reporting beats because everyone's trading like a madman. Citigroup results exceed analyst estimates on gains in fixed income and equities trading. You're obviously seeing a trend. The fact that volatility and just the chaos of the situation is so high, it's prompting a lot of people to do a lot of trading. So all these banks that have trading desks, they're just hitting the cash register over and over and over again. Interesting with all of that though, bank trading desks are minting money from Trump's tariff chaos. Goldman Sachs, JP Morgan, Morgan Stanley saw huge jumps in trading revenue. So obviously this is a little backwards looking, but this is a good, in my humble opinion, a good learning lesson for everyone moving forward of like when everyone who normally doesn't talk about stocks starts talking about stocks and you're looking for a good play. Well, it does seem as if the banks that, not all banks have these big trading desks, but the ones that they do, Goldman Sachs, JP Morgan, Morgan Stanley, even Citi, just lock that away in your brain. Lock that away because that will most likely be strong plays in future quarters when they're like, dude, we just absolutely crushed it. Absolutely crushed it. Investors haven't been this bearish in 30 years, according to a B of A Bank of America poll. So right now, I'm kind of on the fence. I see some compelling arguments that this is just the start of the sell-off and it could get 2x, 3x worse. Okay, yeah, something to consider. On the other side, I'm seeing a lot of people saying, well, hang on, this is a policy-driven situation. So if things get bad, they'll most likely just change policy. So inherently, there's already a floor put in. So with it, like, I think it's interesting that this is the most bearish that people have been in 30 years. When obviously think about some of the craziness that's happened in the last 30 years. We've had way worse situations than what's currently going on. So, and it's also just a poll. So we know most people are not good at trading. So necessarily do we want to buy? Because this to me seems like more of an emotional thing than anything else. And we all know that when you let emotions lead your trading and your investing, generally not such a good tactic, if you will. Investor sentiment regarding economic prospects is the most negative in 3 decades. 82% of fund managers expect the global economy to weaken, and a record number intend to reduce exposure to U.S. equities. Maybe they're right. Maybe they're wrong. Obviously, it's much easier to Monday morning quarterback in these situations. Speaking of that, before we get into a little bit of spicy drama here, I do want to remind you after the market closes today, United and Interactive Brokers. Then tomorrow, we're going to hear from ASML. This is a very important one because it's going to tell us what in the world is going on in semiconductors. ASML is I believe a Dutch company. It doesn't really matter, but they are a company that creates the machinery used by a company like TSMC to fabricate the chips from designers like NVIDIA. So TSMC is the actual fabricator. ASML makes the machines, highly impressive, technically precise machines to create all these semiconductors. So these are TSMC is a fabricator, ASML is the machine designer, and then looking at the actual designer of what chips they don't want, that's something like NVIDIA, just to understand a little bit of just the entire process. But regardless, ASML, TSMC, Wednesday, Thursday, back-to-back. This is going to give us an idea of what in the world's going on in semiconductors, which right now is becoming, once again, kind of the hot news due to everything going on in the U.S. here with Trump and NVIDIA saying we're going to build out TSMC, Meta, OpenAI, Microsoft, SoftBank. Like the list literally just keeps going on and on and on. So pay attention to those. If those two are good numbers, yes, I think that this recovery might become like that V-shaped recovery that has some serious legs. On the flip side, this is kind of a high-risk situation because if both of those are dismal, not so bueno, mi amigo. I should also point out that Netflix is reporting right after market close on Thursday, so this could, a lot of people are just going to use that as like the bellwether for the overall tech sector. So for the remainder of the week, I'm watching ASML, TSMC, Netflix. Feel free to screenshot this. Go to @eWhispers on Twitter. It's also in all the newsletters as well if you're signed up for that. Now, back to the drama. Back to the big boy billionaire drama. JP Morgan insider trading alert. CEO Jamie Dimon just dumped $31.5 million worth of JPM shares. This would be a thing supporting the bearish side of the argument, if I'm being completely honest. Not the best look when you have a guy who intimately understands monetary policy, the economy. He has all the information of the people at his bank. He knows if they're trending up or trending down. This is a guy who has a very, very unique, intimate look into the financial health of not only the U.S. economy, but the entire globe. And we also know that everyone's just inherently greedy and they want more money in their bank account. So you would assume that all these rational players are doing what's individually best for them. And that guy, Jamie Dimon, running the largest bank in the world, which once again gives him a data set and an insight that no one else has thought, it is time for me to sell $31.5 million worth of JP Morgan stock. Not so bueno. Not so bueno. Now, if you look at his history of when he decides to sell, he's also pretty fucking spot on. So that's another thing. Like, I don't think this is necessarily a misfire from him in any means. But does that have an impact of what's happening today or tomorrow? No, not really. Remember, these things are a little bit more slower moving. So he's going to be looking probably multiple months, multiple quarters out. But I have to admit that this is a point in the bear column, if you will, because that just can't be good. I don't know how you can necessarily spin this one of somehow it being bullish, because obviously it's just straight up not bullish, the fact that he's selling. So a little bit concerning, but I just want to share if this was breaking as of yesterday. You could see here, I don't know if my big head's blocking it, but right here, the 14th. So it got reported yesterday. Not so good, but something to consider. All right, if you haven't already, sign up for the newsletter. It is 100% free. It's always been free. It always will be free. MacKohrs.locals.com. I break down the previous week, what to look forward to in the upcoming week. I give you all the earnings. I highlight the ones that I think you're going to care about the most. I give you a little cheat sheet of all the major macroeconomic events. Today, we got the Empire State Manufacturing Survey. Kind of important, but most people don't even know what it is. So really, how important could it be? Obviously, tomorrow, the big thing is retail sales, and Fed Chair Powell will be speaking. Like I said, we will be doing a specialty stream of this tomorrow, and then Thursday is the final day of the trading week for this particular week. Probably most helpful, at least for my degenerate day traders, scalp traders, 0DT traders, is the seasonality of each individual day. Over the past 27 years, this day, Tuesday, April the 15th, has not really been a seasonally trending day. At first, it was bullish almost 25 years ago, and ever since then, a little bit up, a little bit down. So that doesn't inherently mean today's going to be choppy. It just means historically, this day's been won by the bulls some years, and some years it's been won by the bears. So basically, it means for me that I'm not really taking seasonality into account. And then to conclude this week, I do want you guys to know that tomorrow historically is a very bullish day, tomorrow. So this might be influencing you if you happen to be swinging a position overnight. But over the past better part of 3 decades, the bulls have won this day 3 out of 4 times, 74% with a sky high profit factor of 4. It's not just bullish, it is a very bullish day. So for whatever's going on, and it most likely relates to not only coming into the monthly, but also we have vol expiration. It is obviously some bullish influences. So I just want to call that out. And then Thursday is kind of the opposite. Even though the bulls win it more often, when the bears win it, they win it with greater size. So it's a bit more bearish. So I just wanted to not only call out today, not really being anything from a seasonal perspective, tomorrow seasonally very bullish, and then to conclude the week seasonally a bit more bearish. So I just wanted to share that. And then that brings us to our key levels. And to get to our key levels, let me see where we're expected to be opening right now. We're expected to open at 5,400. And guess what's special about 5,400? Not only is it a key technical level, a key psychological level, and a key open interest level from the options market, it's also smack dab in the middle of our transition zone. So for those of you who are day traders, like I said, scalp traders, today, if you're considering the gamma and the delta influences, this is the transitional zone. As in above 5,410, I would argue the bulls are in control. Below 5,390, I would argue that the bears are in control. So it's no surprise that the market gods above, the people marionetting all these green bars to the upside and the red bars to the downside, are making us kind of wait. So this opening, like we are, as of now, we are slated to open right in the middle of this no man's land zone. Once again, bullish above, bearish below. In the middle, I would say it's going to be choppy because really the market makers are not going to be incentivized to push it one way or the other. Now, in the bull case, if we can break out and hold above 5,410, my first target would be 5,425. Once again, these yellow lines, the golden lines, whatever you want to call them, those are key open interest levels. We see a decent amount of action. Now, from there, from a technical perspective, I'd be looking at yesterday's high at 5,460. Obviously, we have some action at 5,450 just because it's that $50 increment. So somewhere in here would be my target number 2. And if we really get going today, I'd be watching 5,500. This would be my reach target, and that would happen with a collapse of vol and maybe a Vanna-esque rally. Vol coming down, a bunch of puts being closed out. That's the scenario in which we could see a shoot all the way up here, which not going to surprise any of you. But if we look at the net open interest on the 0DT, there's a lot of sold calls there, which is giving us this positive gamma node. So that's all the bull case. And then obviously the bear case would be the breakdown of 90. Then we have this target here, yesterday's low, but also this key level at 5,350. And then the reach target would be all the way down here at 5,300. So that's where we're at. Obviously, I'm a little bit late today. Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. It's pretty much this simple. If we can hold above this transitional zone, I would argue the bulls are in control. If we hold below it, I would argue that the bears are in control. And if we're in between it, it just means no one knows what the hell is going on. So I'm just basically going to be looking for what side of the zone are we on? Are we on the bullish side or are we on the bearish side? I'll be looking at momentum, 5 minute, 10 minute, 30 minute, 4 hour are bullish, 5 minute, 10 minute, 30 minute, 4 hour are bullish as of now. But obviously we could have a little bit of a drop. I mean, if we take out the 920 low, we're kind of back in that bearish zone. So even though things are arguably bullish right now, it's not like they are dominantly bullish, at least right at market open, especially because we're kind of just chilling right on top of this transitional zone. I'll drag it over here just to better illustrate my point, but the longer we hang out here, the better we are. And remember, my first upside bullish target, if you happen to be trading right out of the gate, would be 5,425, and then the next one would be kind of this 10-point zone, 5,450 by 5,460. I will remind you guys of all the bearish levels if we happen to break below this level. So anyway, we don't really have much of price structure because the market just opened. So there's just really not that much pricing data to know, do we have higher highs and higher lows quite yet? Obviously, from a daily perspective, you can see we are trying to trend up, but overall, we're still within that range created on Wednesday, April the 9th, which is a very important day because that's the day that we got the news from Trump that he's going to do kind of like the 90-day pause, or at least bring all tariffs down to 10% on anyone except for China for 90 days. And everyone else is just going to be paused at 10, at least for now. So we're still in that range. Obviously, we are very close to the top side, so it makes me feel more comfortable that we are going to get that breakout and push for the upside gap fill, but we've seen crazier things in the market. Just because we're closer to it doesn't mean it's necessarily going to break that way. I think it's statistically more likely that we're going to break that way, but remember, when it comes to the market, nothing is ever guaranteed. So I would love to see the snap of 5,482. That is the high from Wednesday. So on a daily perspective, yeah, we're seeing some higher highs and some higher lows, but it's not really that dominant. dominant. We're not seeing like that much momentum. It's like kind of a slow, painful grind to the upside. So just wanted to call that out on the daily chart. That's obviously the major stuff I'm paying attention to. We've already hit my first bullish upside target right here. Once again, key open interest level. From there, I am looking for this 10-point region, somewhere between 5,450 and 5,460. If we can hold above 25, remember, just tagging it, that doesn't really count as a breakout. Not only do you want to get above and hold above it, but ideally, you'd see some strength in the options market that kind of agree with that move. And right now, the Mag 7 is coming out of the gate fighting. This is the Delta flow on the combination of Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla. And man, oh man, that is some bottom left, top right type of stuff. And then looking at the S&P 500, pretty much the same situation. So out of the gate, the bulls are repping some strength, but we've also seen as recently as yesterday, some pretty crazy reversals in the overall market. So just because we're bullish for the first 2 or 3 minutes doesn't necessarily mean the entire day is going to be. And is anyone surprised? Literally called this level out to you before the market even opened. No one in here should be surprised that we're getting rejected. Why does this happen? This isn't because I have some sort of clairvoyant ability. This is not rocket surgery. You just notice that there's a bunch of open interest there. So when you get to those levels, you got to get prepared for some sort of a reaction. We literally went from 5,412 all the way up exactly to 25, and we're getting smacked because most likely there's people who are now from out of the money to in the money, and it's just common for people to take their money off the table when that transition happens. And now we'll see. I mean, we can double check right here. Yep, you have calls starting right around 9:32. You can see that the call delta started to dip, which is a common signature of taking some money off the table. What's interesting today is we're seeing puts, the put delta pop, which should actually give us a floor. The more that put delta goes up and up and up, not all the time, remember, nothing in this game is ever guaranteed, but when you see the put delta, specifically the put delta rising, bottom left to top right, that really does give you a nice base on the day, and it's no surprise that it seems to be happening right as we're on top of this transitional zone. So right now, it's actually kind of setting up in a kind of logical way, like not like one of those days where we have like a lot of confusing mismatch. If anything, I would argue today, as of now, and who knows what's going to happen, and I'll probably embarrass myself by saying this, but right now we kind of have nice alignment across the board because we see the Mag 7 pop and trying to hold. We see the S&P 500 pop and trying to hold. We're seeing the momentum on the 5-minute, 10-minute, 30-minute, 4-hour, the momentum on the 5-minute, 10-minute, 30-minute, 4-hour for the S&P 500 and for the NASDAQ 100. They're all bullish. This is the first day in a while where we're actually kind of getting that nice, legitimate alignment across the board. Now, obviously, I'm saying this, and we're only 5 minutes into the day, and the very next bar might completely invert this and embarrass me, and my call, it's completely wrong. But based on the current set of data, when we're looking at price structure, price momentum, and on options flow, and then also kind of uniquely what we're seeing in options flow, like what it is, giving the bulls a little bit more of a fight here. Yeah, we're even seeing these Mag 7 puts. So once again, puts the put delta popping like that really does give you some nice base to work off of. So it would be nice if we stopped getting these dagger red bars, which once again, we are finding support right at the top of the transitional zone. There is the closing value, and we know the market has a high proclivity to hit the previous closing value. We haven't quite done that today. So maybe it's a situation where we trade down, hit that, and bounce off of it. That's totally possible. It also happens to align with that massively important level of 5,400. But I would personally prefer, if I had a magic wand of what I can make happen, I would rather we rip all the way up to 5,460, tag it, a little bit of a pullback, create a base, and then rip all the way up to 5,500. If I had a magic wand, that's what I would make happen. But remember, MSTR getting a nice pop. What we're really looking for is a very noteworthy collapse in VIX. Right now, there is that positive gamma node at 30. So that's a little bit more of sticky price action. So that might cause literally the VIX to stick. But if we can break out of that black hole, if we can snap that rubber band below 30, is negative gamma all the way down to 25. So like what I'm looking for is kind of just like, I want to see that tilted nature in volatility. Because if it can actually start pushing to the downside, we can easily see a 5-point sell-off, which would obviously be bullish for the SPY, for the NASDAQ, and for all individual equities. So that's really, I'm just going to keep looking at the VIX today, because if it could just break that magnet-esque quality of 30, we could see a collapse there. Obviously, VIX down, UVXY down, SPY up, Q's up, and then some of our favorites up. MSTR, I have that up. That's one of my biggest plays right now. I chose to represent a bullish position across the market via MSTR just because it had lower implied volatility than all these other plays. And obviously, thus far, it's working out pretty nicely. One that's kind of hurting me is actually Broadcom. I thought it'd be doing a little bit better. But we have NVIDIA having a decent day right now. What else is happening? Palantir is having another. Palantir's been fighting back and fighting back well. I kind of wish I got into that. I didn't buy calls on this one just because the IV was so juiced. Once again, on a relative basis to themselves, MSTR had a bit more of a reasonable cost. So that's really why I'm in that particular play over these other ones. But let's see. All I could tell you is right now, we keep dancing around. We got rejected at resistance. We bounced off of support. We opened at support, bounced right into resistance, sold off back to support, bounced right back up. And this is now our second test of this resistance level. And I think if that gets going, that might be the thing that brings the VIX below 29. And really, we start to see the capitulation and volatility. And if that happens, I'm looking for this SPX to go all the way up to this 10-point region between 5,450 and 5,460. And then obviously, that would be correlated most likely with the names of NVIDIA, MicroStrategy, Palantir, Broadcom, like all those ones ideally popping off. So I haven't made any trades yet today. I did just get a breakout alert though on Bitcoin. That's exciting. Bitcoin attempting to take out that high from Sunday at 86. So if that keeps going, that's exciting because it means the next stop might be all the way up here around 88.5, maybe 88.8, something like that. The high from Wednesday the 2nd, or maybe even late March 24th. So looks like we're getting a bit of a technical breakout on Bitcoin, which obviously is going to be very supportive of a move higher in something like MicroStrategy. So how's Apple doing? I see some people talking about Apple. Apple's break even right now. Netflix is up 3%. Netflix is almost $1 trillion now. It's really going. Look at that pop in the Qs. Look at that pop in the SPY. Pay attention. VIX is now sub 29. Remember, I'm looking for that puke all the way down to about 25. How is UVXY? UVXY. I have puts on UVXY. I really was looking for this to speed up. I'm actually kind of surprised that we're not roughly in the range of like 28. I'm a little bit bummed out about that, especially because we do see this breakdown in VIX. The VIX is at, it's breaking this low from Friday, already broke the low from Wednesday. I thought it would be a bit more correlated. Unfortunately, it is not UVXY. So my puts right now on this one are just absolutely hemorrhaging. I need this to speed up. I really need this to crack 28. Ideally, I wanted to play the downside gap fill to 25, but as you can tell, not working out the best for me at the exact moment. All right, price structure. Obviously bullish. I like that. We have just higher highs, higher lows, price momentum, bullish across the board. And then looking at options flow, here's a look at the S&P 500. All those puts are closing out, once again, giving us that nice foundation to work off of. So big fan of that. I would like to see more aggressive call buying. The calls have been kind of flat, but regardless, the fact that the delta is going up, hey, I'll take it. However I could get it. So beggars can't be choosers here. I want price up. So if it's going to be from puts closing out, giving us that foundation, whatever, I would like for it to be kind of the double doozy. I'd like for the put delta and the call delta to go up. But once again, beggars can't be choosers. Same thing in the Mag 7, bottom left, top right. And it's, well, this one, there was some call buying up until about 940, but really you're seeing that same trend of this put delta. Remember, the puts are the blue lines, the dark blue and the light blue, while the calls are the green and orange. So the light blue and then the green are the next expiration, while the dark blue and the orange are all expirations put together. So thus far, I mean, the opening 11 minutes pretty strong. A little bit of a reversal there, but obviously you're seeing the generic trend on the day. I wonder. I was going to try to wait. I probably should wait. Here, let me switch this up. As you guys can see, I have not traded today. So right here's my 20 Apex accounts. This is day 2. And then here's my 5 take profit accounts, which I think this is day 3 or something like that. They're pretty close. But regardless, you kind of see what's going on here. Haven't done it yet. Oh man, this would have been a nice trade right here at 938. It's a little early for me, but from a technical perspective, nice pump, pullback. You're breaking this little trend line. It saved itself at the EMA. It's on top of VWAP. This was if you took this trade at 938, like I said, it's a little bit early for me, but from a technical perspective, you had well-defined risk. Obviously, it already crushed. You could be moving your risk all the way up to here. That was a nice trade. So for anyone in chat who took that little breakout trade right there, man, you had everything going for you. You had good risk, you had momentum, you had price structure, you had options flow. You're playing like kind of this vol expiration tomorrow. You're playing the vol collapse today. Like everything about that. If you took this long trade at 938, like that was legitimately a good trade. Legitimately a good trade. And remember, you're basing the quality of your trade not off the outcome. Obviously, this one worked out well for you, but you're basing it off just the decision going into that trade, because you never know what the next bar is going to be. So literally based off of price structure, momentum, options flow, and then also understanding some of the larger forces at play right now. That was a beautiful trade. That was absolutely a beautiful trade if you ended up crushing that. Speaking of that, right now, Apex just announced a new deal. Pinned at the top of chat in the description of the video. They are the partner of today's show. That code Goonie will get you 80% off. We've now been a couple weeks without any good deal on Apex, so they announced it today. It's an Easter special, 80% off with the code Goonie. So instead of paying, what, $167 or something like that, you can pay, I believe, $34. So much more affordable. And obviously, I do want to remind you on Apex, you can go up to 20 accounts. If I'm being completely honest, you shouldn't start with 20 accounts. If you're new to the world of futures trading, if you're new to the world of Apex, yeah, eventually you can scale up to 20 different accounts. But if you're new with it, start with one. Just chill for a second. Like, it's going to be a-okay. So I do want to remind you, you can scale up to 20. On Take Profit, you could go up to 5. But in my humble opinion, it is best to just start like calm, cool, realistic type of a thing. But anyway, pinned to the top of chat in the description of the video. It's been a while since we had a deal on Apex. You could get 80% off with that code Goonie. And if you want to use Take Profit instead, right now it's 30% off and no activation fee. The code Goonie will work on both. But obviously with this new deal, Apex is the partner of today's show. So shout out to them. And with that being said, we are slowly but surely, I would say, successfully holding this breakout. And that is setting up my next target, which is somewhere between 5,450 and 5,460. 5,450, somewhat of an important open interest level. And then 5,460 is an important technical level. It is yesterday's high. So that's why I'm watching this 10-point region as my next bullish target. We already hit bullish target number 1. On first attempt, we got rejected. On second attempt, we broke out. Looking for that follow through right now, looking for somewhere up in this range. And obviously, I want that to happen with the VIX collapsing. It's just below 29. So I'd love to see just take out 28, 27, 26. So I'm going to keep paying attention to that. Palantir, nice pop going sideways. MicroStrategy, nice pop going sideways. Looks like we are getting a bit of a pullback here. Let's see how Mag 7's looking. Mag 7 is still looking real strong right now, folks. Looking at the S&P 500, we're seeing a bit of a switch here. People are selling their 0 DTE calls. We're seeing weakness. We're seeing bearishness on the call side. Right here on this pump, we're now seeing calls expiring today. We're just seeing this call delta drop for whatever reason. We're seeing the put delta pop, which is actually bullish. But right here, starting at 942, we're seeing it's almost perfect. Like, you see how it's being like perfectly stepped down and down and down. So it tells me it's someone with size. It tells me it's a bot system trying to just get either out of a position or into a position. I don't know if they're selling 0 DTE calls to create a position, or if they're selling 0 DTE calls to get out of a position. Regardless, it has a net negative impact on delta. And that's exactly why we're seeing a little bit of decrease in price, just because they're just being perfectly walked down. So I would rather it look like what we see going on in the Mag 7. So I'm just kind of waiting for, and they might be done now. It seems like it has bottomed out. So whatever that sell program was, hopefully it has now stopped, because it went from 942 to 946. So it was about 4 minutes. It might be returning right now. So kind of just paying attention to that. But overall, like, price is obviously still strong. Price is still strong. Price is still strong. Palantir's popping.
Order Order submitted.
All right. The trade has been executed. My financial health is now in the hands of the market gods. May they bless me today or teach me a lesson. All I know is the die are in the air, and it is time to find out if your boy's going to make some money. We are in the air. The die are rolling. Is it going to come up old Mateo, or am I about to get smashed? Come on, monkey. Winner, winner, chicken dinner. Who's going to be right? Is old Mateo going to be able to make a shekel or two today? Come on, market. Come on. Don't embarrass me in front of my friends. I'm supposed to be the best trader on this side of the Mississippi. And the best trader on this side of the Mississippi should be making a lot of money. Come on. Let's do it. Let's do it. A little bit of optimism, if you will. A little bit of cheerful exuberance. Come on. Let's just say it take out 19,100. I'd love for it to sit up there. Would love for it to sit up there. This 80. We got some sort of breakout. MSTR on the daily here. I just got some alert. Yeah, MSTR taking out a recent swing high from Wednesday, April the 2nd, which would mean that the next target is all the way up here at 343. And then I just want to set up a reversal alert because I am bullish on that position. MSTR looking strong. Palantir looking strong. SPY, fresh high. Qs, fresh high. We are getting that 15-minute Orbo breakout, so I like that. Come on, keep climbing. No red bars. No red bars. No red bars. No red bars. You can do it. You can do it. You can do it. You can do it. Come on, brother. Come on. No dips. No dips allowed. VIX is dumping. That's what I want to see. VIX, I wanted to go sub 28. I want it to go sub 28 for sure. Oh, what is this low? This low is at 946. 946. Okay. 94. No. Keep it in the green. Keep it in the green. Keep it in the green. All right. Here's a quick look at the flow. Let me put these back together. All right, Mag 7. We had a nice pop all the way up to 949. Little bit of a pullback here, but overall the trend is still very bullish. So it's not only just price, but it is obviously options flow. Looking at the S&P 500, we got that dip till 946, which kind of gave us that higher low to play off of in both the SPY and the Qs. And then we saw a pop all the way up to 949. We're seeing a bit of a pullback right now. Remember, we're kind of paying attention to whoever's selling these calls. The call delta is just dropping. So calls are being sold, whether to create a position or open a position. Who knows? We'd have to double check the open interest. But then we saw it pop, and then it just put in a lower high. So this is the one thing that I find concerning about the current play. Obviously, the put flow, that's really nice. That put delta is really popping. So for whatever reason, we have puts also being sold here. Come on, just keep it going. Keep the train on the tracks. And we are about 7 points away from my next, the start of my next target. Remember, my next target is this zone, the 10-point zone between 5,450 and 5,460. All right. The market gods reminded me that they are in fact in control. I had a nice push. They came back, tested me, made me sweat for one quick second, but hopefully they will realize that I am a devout follower of everything that they represent and just quickly rocket the market right now so I don't have to sweat at all. I just get to lock in the money, take my 25K. Let's go. Remember, good people make money. No pressure, no diamonds. You got to get a little lost to get a little found. 'Tis the way of the Jedi. Come on. No. No. Come on. Don't do it to me. Don't do this to me. I feel like this worked better when I wasn't watching it, you know? I feel like this very much was working better when I was not paying attention. Is that the trick? Kind of like a cute girl at the bar, you have to just not give her that much attention? Is this just a game of psychology right now? A brutal game of psychology? Like I have to act as if I don't want it that bad. Is that what the market gods are picking up on? Like this kid, he wants it. He wants it a little bit too much. Is that my problem? It feels like that it could be my problem. I think more of the problem is the fact that we're right at 19,100. So I wouldn't be so surprised if we're reacting to it. SPX, we still have some upside distance. I mean, we're not even at 5,450. We're at 42. So we have about 8 points there. And even if we get 5,447, 48, I should already be at my profit target. I am, as you guys can tell, this particular tranche of accounts, I am approaching it differently. Instead of doing trend following out of the gate, which is my preferred way to trade, to build up the buffer, I'm going to see if I could go about an entire month of just a measured profit target, hit the profit target, and move on with my life. That's what I'm attempting to do. Is it the right move? Is it the wrong move? I'll tell you better afterwards. I have no idea. All I can tell you is I don't need this to go much farther for me to hit this profit target. Come on. 'Tis the way. You got to get a little lost to get a little found. This was us getting found. This was us getting lost. Getting found, getting lost. Ideally, we can get found. Like this is the map. This is the compass. This is where the market's meant to be. This is where the market feels good, you know? Come on, we're just riding the trend. We're a surfer. We're just riding the wave. We're just trying to hang 10. Can't take life too seriously, you know? Come on. I'm also kind of praying that we don't get some random 10 a.m. dump. All right. We are trying to hold 19,100. Fan of that. Come on, brother. All right. For some reason, we're stalling at 5,445. Riddle me that, Batman. MicroStrategy popping all the way up to 320, taking a little bit of a hit right here. Palantir holding pretty nice, like ran all the way up to 96.50. Something's going on with MSTR. Vol's picking up there. What do we have going on with the flow? Is the flow turning against me? Mag 7 flow is still looking pretty good. S&P 500 flow, after hitting a new delta high, we're coming back a little bit. Is it this call selling still? It is. What the fuck is going on? The call delta has been clearly dropping ever since 942. The only reason we keep going up is because the put delta is really going. Man, if this call delta can turn around, that's how we're talking about maybe going all the way up to 5,500 today, because the put delta is doing it exactly what we needed to do. All right, here we are. We're just battling out. This is the Rumble in the Jungle, except it's this particular version of Rumble in the Jungle is called Degenerate Trader is either making money or crying in the shower. That would be the name of this particular show. We just keep getting so close. It's just teasing me at this point. It's just teasing me at this point. Basically, it's these damn call sellers on the S&P 500. That call delta just keeps dropping and dropping. Like, can they just chill? Can't they just wait till I like hit this profit target or something? Can't they just give me a one chance to breathe? Come on. You could do it. You could do it. Stop it. Stop it. There we go. Now we're cooking with caviar. Now we're cooking with caviar. Come on, brother. Nope, wrong way. I like that. That was a nice hit of dopamine to my brain. Not so much this one. We're really just range bound at this point. We're really just range bound. I got in right before we pushed up to this range, and pretty much ever since 9:48, we've been stuck in this range as we see the call delta clearly just being dropped in the S&P 500. Yeah, fuck. What is going on, man? I mean, we're flat there. The Mag 7 is just looking better. The S&P 500, this drop right here, it's just these calls. Calls are just being sold. Why are they doing that? Why are there so many calls being sold? Let me see if I can figure out which strike that they're focusing on. Why? Why, oh, why would they do this? Yeah, that calls, it's putting a natural ceiling on us. But we're also, because of the put direction, we're simultaneously getting a floor as well. So this action from the calls is putting a ceiling on us today. This action on the puts is putting a floor. So is this just going to be another like just chop bullshit type of a day? News at 10. I don't think there's any major news at 10. No. All right. Well, I'm just hoping that this pullback at 946 holds. As long as that low holds, it's just I could wait it out type of a deal. I'm not too worried. Just because that price structure is still bullish, higher highs and higher lows. Now, if we snap that low at 946 on the SPY and the Qs, that's a little bit of a different story, and your boy might be sweating a little bit there. Your boy might be sweating a little bit if we take out that 946 low. So we're kind of just stuck in this no man's land, and unfortunately, I think I'm just waiting for this call selling to stop, if it ever stops. It's like, this is like the David Goggins of call selling. There's just no fucking breather here. Yeah, someone kicked it off at 942, 943, and look at that. Damn, dude. They're just no breather. The Mag 7's doing everything it can. Like, that's a beautiful trend. But you can see here, this is the net impact on the delta. Is just such aggressive call delta dropping, while the Mag 7 it had a nice pump. It's kind of chilling. It's looking at the SPY saying, what the hell are you doing type of a deal. Oh, patience. Shorts are trapped. You know, I find that people say that when people say that, and it's like a very common adage in the world of retail trading, like shorts are trapped. What does anyone even mean by that? Like, truly, it's just shorts are trapped, as in they can't get out? What do you mean? All you have to do is hit the buy button and they could get out. All right. Will the 10 a.m., will the turn of the hour help me? Hopefully. I am on the right side of the trend, at least as of now. But let's see if that changes at all. Let's see if I'm just hoping that the trend stays intact enough for me to make my moolah. All right, setting an alert on the intraday high and low. I don't know. Oh, yeah. Okay, MSTR, I just want today's low to hold. All right, we're swinging it back around. In all reality, I wish I waited for this trade instead, this breakout trade. Had I not had a position, I'd probably be focusing now. I'd be like, okay, it's past 10. We got an overall push to the upside. So really, if I waited till 10, I'd be in at the same price, except I wouldn't have had to sweat through this little pullback here. But I do like this potential, like, hey, we're trying to get on the top side of the EMA. We're already on top of VWAP. So like, I would be roughly getting in at my same price anyway. So obviously that's completely lucky, because maybe the turn down could have been way worse. And then you'd be like, well, why are you in anyway? So that's definitely an aspect of luck. But literally this trend line breakout that I'd be interested in, honestly, I might even be waiting for this break in 90. So I'm actually a little bit 10 points better now. But that obviously that just means you took on a little bit extra risk. So feeling a bit fortunate. I'd feel way more fortunate if this push at 956 just went all the way up and hit my profit target. But based on where I got in and where you guys could argue I theoretically should be getting in, it effectively is the same price. So just lucky break. Lucky break. Come on. You can do it. Just hold steady. Really what I need to stop is just this MicroStrategy is giving quite a bit of it back. Palantir is holding nicely. It's up 3.9%. Tesla's now up 1%. Broadcom's up 1.2%. Broadcom's looking good. Tesla's looking good. Meta's giving it back. Netflix is just ripping. Have you guys seen Netflix? It has not looked back. Netflix might be saving the SPY and the Qs right now. Netflix is not messing around. Apple not doing the most. Microsoft popped and kind of giving a bit of it back. Tesla's looking good. Nvidia's not really doing anything. MicroStrategy was good, and then it got hit. Palantir's looking great. Netflix is looking great. Broadcom's looking pretty good. All right. 80. All right. What I'm going to be doing here soon is if I could get a little bit of a follow through on top of 19,100, I'm going to be moving my stop up either to this recent swing low, or I literally might just go break even and take all risk off the table. Might pull that one out. Might pull that little trickery out of the hat today. I just want to see us, like, if we can hold 100. I don't want this to be like a test and like just because I'm within 20 points so that like a little sneeze can knock me out of my position. So I'm kind of looking at 19,000. See right here, I kind of tagged it, but we're battling. We're also at this EMA. So I want to see that follow through maybe to like 19,110, maybe something like that. And then I could just move that stop up, and then I'll be taking risk off the table and I can move on with my life. Move on with my life. Come on, just get that follow through. Oh, brother. Oh, brother. Oh, brother. Oh, brother. Oh, brother. Oh, brother. Oh, okay. So a good risk point is actually 42.43. 42.43. See how we got smacked right at a second standard deviation of VWAP? I've done a lot of research on this second standard deviation move, and it's one of those things where if you're on the extreme of it, whether on the top side or the bottom side all the way here, it's something that you could ride, but when it starts to break back in, there's some definitely like mean reverting qualities. See how I couldn't hold it, and then right here we got smacked and came all the way back down to a super trend. And now we're just choppy. I want to see us take out this recent high. I can move my stop up. Really right now, in the worst case scenario, I should be moving it up. And I guess mentally I have the stop there. I could always just close it out. I'm not really using this as my stop. Not at all. In reality, I'm using something more like that, I guess. Come on. Come on. Stop it. Stop. Well, this is horseshit. All right, looking for that trend line breakout. Violently going nowhere. All right, we got a burst of trading just happened. We almost got that trend line breakout. If I waited for this, I would be off by about 10 points. So I guess being a little early might pay off for me. Maybe, but I had to take on this extra risk. So you look smart if it works out. You look stupid if it doesn't. That's the game of trading. That is the game. Bust out the magnet. I'm about to, dude. I was going to try to give the market a fair fighting chance today, but I might have to go full magnet mode. 5 minute, 10 minute, 30 minute, 4 hour, all bullish. 5 minute, 10 minute, 30 minute, 4 hour, all bullish. Let me go back to this. Here's a look at the options flow. S&P 500 trying to swing back up from a delta low reading, but is it that call? Dude, calls are just getting sold like no other. This has to do something with the vol expiration. Look at all those calls. Just the call delta is dropping while the put delta is rising. So it's putting a cap on us and also a floor is the net impact of that setup. And the ceiling is being set at 5,500 and the floor is rising throughout the day. But I do want to be clear that we knew this coming into it, and it's becoming more so true now from the real-time trading. 5,500 is being set as a ceiling. Like, clearly it is being set as a ceiling. Clearly being set as a ceiling. Come on. We tag this little breakout here. Come on. I feel like I've been in this trade for an eternity. I got in at 9:47. It's 10:07. Yesterday's trade took 49 seconds. This one's going to take apparently 49 minutes. Come on. Let's just see that fresh high. Let's see that beautiful fresh high. Come on. No pressure, no diamonds. No diamonds, no pressure. We're in the blender right now, team. We are in the blender. Oh. Mag 7 Delta still going nicely to the upside right there. S&P 500 is also trying to swing up. We are about how many points away? We're about 7 points away from the intraday high, and we're about 10 points away from my second target. First target was 5425. Next target is this 10-point zone between 5450 and 5460. Somewhere in this 10-point zone, this is target number 2, which we seem to be trending that way. We're definitely trending that way. Come on. I am half tempted to just move my stop up to break even so I don't lose any money. I am tempted. Come on. Why can't we just get that nice pop follow through? Come on. It really just doesn't want to do it today. 41. Dude, it keeps getting so close. We just triple top. Smack, smack, smack. Oh, this one. This is a battle today. We got nice follow through out of the gate this morning. And now, basically, moments after I placed my trade, we just got put into chop. Absolute chop. Absolute chop. I think this is a patience play. Like, I really do think I'm on the right side of this. I very much... VIX, I want to see VIX go below 28. Come on. You can do it, Tonto. You can do it. Here's a look at the flow. The Mag 7 still looking strong. S&P 500 had a nice swing up. We're getting a little hit right now, so I want to see that trend continue. We could see it more granularly here on the 5-second. Nice swing up, smack. I assume the smack was from calls. Here, let me see. Yep, right here. Dude, aggressive call selling. If that could just chill, if this trend could stop, we could have a nice day. I'm talking about potentially all the way up to 5,500 if that call selling can just chill. If it could just freaking chill. All right, trend line breakout, retest, bounce, quad top, maybe yes, maybe no. I'm not even asking for that much. I just need a little bit of a push follow through. I just need a little bit of a push follow through. Come on. Stop it. Stop it, Batman. Stop it, Batman. All right. Stops at break even. Worst case scenario is I don't make money. I'm trying to be a good trader. I'm trying to cosplay as a good trader. And I believe good traders at certain points put in their stops at break even. Worst case scenario is I make zero. I'm not losing money. Best case scenario is I lock in 25,000.
Order canceled.
Bada bing, bada boom. We did it. We did it. Another 25K. That's 2 days back to back. 25K, 25K. Yesterday, it took 49 seconds. Today, it took a little bit longer, 9:47 to 10:12. So a little like 25-ish minutes. So still, I'm not going to complain. To make $25K right here, $20,000 on Apex, $5,000 on Take Profit, to make $1,000 a minute, you can't really complain. Now, my blood pressure could complain, indefinitely could complain, because that was a bit of a battle. But yeah, it worked out. And like I said, I'm trying to be a little bit more disciplined. So that's it. That's my trade of the day. When I post an update on X later today, the numbers are not going to be any different than this, because I'm attempting to be a monk-like disciplined trader. That's my one trade. I locked it in. I made $25K. When you make $25K in 25 minutes, there's no sense in pushing your luck, at least in my opinion. So locked it in. It is what it is. $25K. Obviously, if you want to trade with someone else's money, Apex just announced this morning that they are running another deal, 80% off with that code Goonie. Pinned to the top of chat in the description of the video. When you are checking out, to get the 80% off, there's a coupon section. You have to put in that code Goonie, Goonie. You can get up to 20 accounts. Obviously, that's what I have right here. Count them up all the way up to 20. I don't think it's necessarily appropriate to start there as you're figuring out futures trading, prop trading in a general sense. But when you get more comfortable, I did want to let you know that you could scale all the way up to 20. And then the reason I'm saying 25 is because I also have 5 Take Profit accounts. So that's the max you could have over there. Take Profit allows up to 5. Apex allows up to 20. That's why I'm trading 25 accounts. So when you make $1,000 on one account and then you copy trade that to 24 others, well, that's kind of how you live by the sword, die by the sword type of a situation. If it goes well, it goes well, 25x. If it goes poorly, it obviously goes poorly, 25x. So today was day 2 of the Apex accounts. I believe it was day 3 or 4 of the Take Profits. These ones are currently sitting just below 55. I did take a $500 payout from all of these. So I basically took out 2.5K. And the reason I did that was to pay the fee for all the recent tests that I took. So basically, this is a free ride, if you will. So basically 500, 500, 500, 500, 500. So 2.5K locked in, paying for all my test fees. So however I do or however I don't do, like I said, it's a free lotto ticket type of a situation. But if you're interested in this, I would never recommend you guys ever pay the full price. I would say, hey, have the discipline to wait for some sort of discount. And right now, Apex is running an 80% off deal. Take Profit's running a 30% off, but that one, there's no activation fee. So they're financially, I think Apex is slightly cheaper right now. But once again, I trade on both and I literally just buy the accounts of at that moment in time, whoever's a cheaper offer. The rules are very similar for the two. They're not exactly the same. And I would recommend kind of going through their FAQ and their rules to have a better understanding of which might be better suited for your own personal trading. Definitely recommend you guys checking that out. Let me just set up new alerts. Obviously, we got the 30-minute Orbo breakout to the upside, a little bit of a smack. The smack occurred, surprise, surprise, right when we hit 50. It's almost as if paying attention to the major open interest levels is incredibly, incredibly, incredibly important. So no one paying attention should be surprised that we got smacked there. No one. Hang on, let me all right. If you are in the Discord, Piper just fired. Once again, if you are in the Discord, Piper just fired. It was a 5 out of 5 signal. So it's the max strength signal. Once again, if you're in the Discord, the Piper strategy just fired. I think you're going to like it. What was this? So how much money did he make if it's not his money? Apex confuses me. No. You're trading on your account. And then when you follow a certain set of rules, you can request money out. And once again, the pathway to requesting money is slightly different depending on the firm that you're trading with. So like I said, Apex is slightly different than what you're going to see on something like Take Profit. So you have to know a little bit about the rules, but as long as your accounts are following those rules, Yeah, you take profit. You can request out money as early as day one, but you have to trade for 5 days to pass the test. Apex, you could pass the test in 1 day, but then you have to trade for 8 days to be able to request money out. So, like I said, there are many, many, many companies in this particular sector, the sim to funded prop business. As of right now, whoa, something's going on. What the hell just happened? There has to be some piece of breaking news. Something just crazy happened. What was that? Is Trump popping off on True Social? No, this was Trump and Harvard border crossings. Okay, that was 2 hours ago. So it's nothing from Trump directly, but something just went a bit nutty there at 10:17. What is the breaking news? What is the breaking news? It has not hit the wire yet, but people are trading on something. Something just happened. The S&P 500 Delta just plummeted to the intraday low, and the Mag 7 took a pretty sizable hit as well. What the fuck is the news? EU expects U.S. tariffs to remain as talks make little progress. Talks make little progress. That is what just nailed the market. EU expects U.S. tariffs to remain as talks make little progress. So I would say the surprise is the little progress part, not the fact that they're going to be remaining as the talks. We knew that they would be there the entire time that the talks play out. So I don't think anyone's surprised about that. I think the surprise is that, like, we're just finding out that they've made no headway on the talks, which literally just torpedoed the market. Fuck, man. Dude, we live in just such a tough time to trade this shit. Oh, fuck. Like that right there shows you that we lived in such an environment where, as much as you want to pay attention to options flow, to price structure, to technicals, to the expiration cycle of whatever, the monthlies, vol and all that stuff, like, what the fuck? We were at the point where vol finally started coming down. We got a little bit of stability, and then look at what happened. Just a random update just torpedoed everything. Jesus. Like, dude, we just can't catch a fucking break, dude. It's so goddamn frustrating. It's frustrating because there's nothing you could do as a trader to, like, somehow be prepared for that. All you can do is have your stops set at break even or something like that at reasonable levels, or at break even when you go into enough profit. But there's no market read or anything like that. There's no data you could have taken in from technicals, from structure, from options. There's nothing you could have possibly have done to know at 10:17 we're just going to get a random negative update from the EU talks. Nothing in your power. So at that point, it's just so incredibly frustrating because it's at that point just pure luck. It is. Like, we literally just got the 30-minute Orbo breakout right here around, I don't know, 10:11, 10:12, 10:13. And now we just got the Orbo breakdown a couple minutes later, just daggered it down. Like, it's just... Gosh, it's just so frustrating. It's so incredibly frustrating. And then don't be surprised if they bounce it all the way back up, because maybe the bots overreacted. I mean, right away, as soon as the news, before we get the news, obviously these big hedge funds and whatnot pay for like faster news sources. So they're going to be paying attention to it like right away. But the bots react to it and they're like, they just generically measure the sentiment of the update. And they're like, oh, that's bearish, so we got to start dumping. And that's exactly what happened. I mean, you can literally see the second right here. I'm on the 5-second chart. It happened at 10:17:30. Huge spike in options volume, and they just absolutely murked it. Right here, you could see all the calls dropped, all the puts purchased, and it's just such a severe overreaction that causes capitulation. And then from there, if it goes down far enough, it could become a self-fulfilling prophecy, and then it gets bad. Or other people are like, great, it's a dip buy, as everyone was knocked out of their bullish position anyway, because they're like, what the hell's going on? It's just such a frustrating time to trade. It's such a incredibly frustrating time to trade. Because like, I guess I always come back to this idea of judge your trades on the decision-making process that was involved in the trade. Did you pay attention to your risk? Did you pay attention to your reward? Did you look at the price trend? Did you look at the price momentum? Did you look at the options flow? Did you pay attention to options positioning? Those are all things that you should be taking into account when you're making these decisions. And if they all align, great. I'd consider that a good decision. What's impossible to take into account is this bullshit where everyone's knocked the fuck out and then they run it back up anyway. So like if you were being respectful of your risk, you got knocked out and then it goes more extreme and then you're happy. You're like, okay, whatever, at least I'm not caught up in it. And then it comes back and before you can even have a chance to get back in, you're already trading past where your average fill was anyway. And the truly, at least in my opinion, my major frustration about this is there's nothing in your decision-making process that could like have told you that. Like it wasn't a predicted thing. It's literally a random news update that just caused the market to drop 1% in a couple minutes, which, I mean, granted, after the recent volatility in range, we've actually been dropping quite a bit more. So 1% is a little bit tame. We've been seeing 1% moves in 1 minute. So at least that one took a couple minutes. But overall, like just all of that constructive work we did all morning. And they're like, nope, one random update just completely torpedoed it. Completely torpedoed it. Make botting a crime? No. Just get good at trade bots yourself. I don't know. You're trying to make it a crime just because people are like, they have a higher technical skill than you do and they're making money off of it. I wouldn't make it a crime. That's just like anti-progress. That's anti-technical development. It's frustrating, especially because they are so skillful and so technically advanced that they can get the news, interpret the news, and place trades on the news before we even know what the news is. I mean, even that, like I pointed it out as it was happening. We got crazy reactions right here on this minute at 10:17, and we saw all the price movement before we even got the news. So what's your argument? Is that there shouldn't be high frequency trading? I'm not saying that at all. I don't think people even understand what high frequency trading is. It's effectively just like providing liquidity to the market, and they're playing the spread. High frequency traders are not directional players. Market makers are not directional players. Market makers are a specialized form of high frequency trading. I think there's massive amounts of confusion of what market makers and what high frequency traders even do. I understand your sentiment, but I would concur that there are things that you can do to put the odds in your favor. Well, even if it's 50-50 odds, it comes back to just, do you have good risk management? Like, build better bots. Yeah. Honestly, at this point, none of you have, like, if you want to be a robo trader, like an automated trader, no one in here has an excuse anymore. With the like prolific expanse in AI, like you could literally have a trading bot set up in like an hour. You just go to like something like Claude or ChatGPT or Grok and you have it build it out for you. As of a year ago, as of 2 years ago, yeah, you have to have a little bit of knowledge related to coding and that type of a thing. But now literally no one has an excuse. If you have the ability to type in prompts, you then can have your own trading bot. There's truly no reason, if you want to, if that's your goal, if you're like, nope, I want to have an automated trading system. And if before this, if you thought the barrier was your lack of coding knowledge, that's no longer an excuse, because you could literally build one out in less than an hour. Bots should be illegal. I don't agree with that whatsoever. It should be illegal. That just sounds like people who want to complain, and instead of saying, okay, that's how the game is, I'm going to get better at the game, you want the game to change to favor your lack of desire to learn a different skill set. That's what it sounds like. Why don't you make one just for fun? I have many trading bots. That's literally how I got started trading. Was back in college, I made trading algorithms for the futures market. And at that point, I was actually trading binary options, which was basically just over/under bets that expired every single hour. But that's a very, very different thing than high frequency. High frequency trading is absurdly difficult, like absurdly difficult. And that's at the point where like they're worrying about code and hardware to the point that nanoseconds matter, microseconds matter, which is by far that's so far away from anything I've done. My bots are like trying to take advantage of a trend or a mean reversion. High frequency trading is a completely different thing. Remember, they're not directional players. Piper's the bot. Piper's the system that fires, and then it doesn't auto trade for me, but I guess I could make it auto trade. You just have to hook it up to the proper API. Should be illegal for bot to trade in nanoseconds to keep price trading 0.5 of the item or whatever. I don't even know what that means. Are bots more successful than you? It depends on the bots. Just because something's an automated trading system doesn't mean it's not profitable. I'm sure there's a lot of automated trading systems out there that don't make money. Like individual traders, for a bot to be successful, it's only gonna do exactly what you tell it to do. So if you don't give it like a good structure, a good methodology, it'll trade, but that doesn't mean it's gonna be profitable. High frequency trading is not for retail. This game is even more rigged. What do you mean it's not for retail? If you had the skill set, you could, as a retail trader, become a high frequency trader, but just most likely you don't have the skill set. It is a very, very mathematically coding intensive world. It's not like retail traders are banned from it. It's just a very high barrier to entry. A very high barrier to entry, but it's not, anyone can do it, which that's kind of the beauty of the market is if you have a good enough idea, if you have a good enough system, you can go and do it. Do your bots trade before 10 a.m.? Some of them do. Some of them don't. Some of them update at the end of the day at like 3:30, 3:45. Some of them are on all the time, and I just choose to take the signal if I want it. Something like Piper doesn't fire until after 10 a.m. because it needs at least 30 minutes of data to trade off of. That's the only bots are fem bots from Austin Powers. Jesus. Yeah, I don't know. It seems like a lot of people are complaining that people have like robo trading systems, but it seems like you're just kind of like bitching and moaning that you're not putting in the effort to build ones yourself. Anyone can do it. Literally anyone can do it. My reason for lamenting is seemingly the natural language processing prompts massive overreactions, and they do it really, really quickly. But once again, you can create bots that counter that or that detect that and then trade off of it yourself. Like, I'm just saying it makes the current trading environment difficult, but I'm by no means saying that it should be illegal. Maybe a silly question on the news. What are the bots selling? Are they most likely selling short borrows or actual shares? No way to know, but what is their play in your opinion? Are they likely selling short borrows? What does that mean? OVO rental. What is selling a short borrow? I think you're misunderstanding some basic terms. To go short in the market, like in equities, like if you're trying to go short Tesla, you have to borrow Tesla shares and then you sell it and then you buy them back to close out the position and then you return the loan. So I think you're confusing a lot of the terminology. But what we saw this time around was was executed in the options market. Specifically, the put delta dropped and the call delta dropped. So the delta on both the call and the put side dramatically dropped. We saw that on the Mag 7, and we saw that specifically here on the S&P 500 as well. Put delta dropped, and the call delta continued to drop as it's been dropping all day. But that's where we're seeing quite a bit of the action. I mean, you could literally see it like right there at 10:17:30. You had a huge amount, for whatever reason, the delta just dropped a lot. And this time around, it was because the call delta and the put delta both dropped. It happened exactly at 10:17. So it appears as if it was executed via the options market. I'm not saying it was exclusively executed there. Yeah, maybe they somehow hedged it out on the futures market. But I highly doubt they went and decided to execute it directly in the equity market, just because there's other advantages, leverage, time, like there's other various things of why you would want to be more so in the derivatives market. I'm not saying that it was exclusively there. Yeah, maybe it did directly short it, to clarify, but I also want to be like, just because there's people who are new here, the way it's the way you stated it, that's just not right. The words you're putting together don't really make sense. Or what are bots selling? Are they the most likely? You don't sell short borrows. Like, that's not a sentence that you hear in trading. Selling short borrows. That's not. To go short on an equity, you first have to borrow the shares. You first have to take a loan on the shares. When you have the loan, then you have something to sell. You sell it. Then when you're done with the trade, you buy it back and then you return the loan. But this idea of selling short borrows, that doesn't really... That's, I guess, not a way you would communicate in the market. But that is directly for equities. Now, remember, you can engage in options or futures contracts. You can open the contract by selling it. You could sell calls. You could sell puts. You can sell an NQ contract. You can sell an ES contract, and all that would require is for someone to buy the other side. Because remember, if you're selling a contract, someone has to be buying in it. So you are basically increasing the open interest of said contract. There's more contracts in play, and obviously every single trade has a counterparty. So if you decide to sell an NQ, someone's buying an NQ off of you. Like, of course, every single trade has an equal and opposite counterparty. If you are selling 100 shares of SPY, someone's buying 100 shares of SPY. If you're buying 5 ES contracts, someone's selling 5 ES contracts. If you are buying 5 calls, someone is selling you 5 calls. Remember, in trading, this only works if you have an equal and opposite, and equal like counterparty. That's the only way this works. But it does get a little confusing, because when you're talking about most derivatives, you are directly talking about contracts, and then you have to talk about what does that contract represent. So like obviously in options, it's an options contract. So if it's a call, that contract represents 100 of the underlying at a specific strike on or before a certain expiration date. And then the same thing with futures. Like futures contracts, they represent the underlying. And obviously that changes based on the contract that you're currently engaging with. What 2 tools would you recommend? The options flow platform and anything else? Options flow, obviously you're going to need some good charting. I'm assuming you're already having good charting. Tools, I mean, you can get really far with just spot gamma. So I would say start with that, because on top of it, I pair that then with technicals, as in charting, and then also, as long as you have like some sort of momentum indicator on the chart, that's it. Because I always look at price structure, price momentum, and options flow. So price structure and price momentum can be found out from any charting. Like, so as long as you have TradingView, you're good there. And then if you want to know about options flow, I would say pick your favorite options platform. And as a person who's bought a subscription to pretty much all the major ones, I'm telling you that like by far, spot gamma is the best. Discord Goonie here. Could you please explain / show us a put credit spread and a call credit spread? I guess black window blasting. Did you go through the Discord guide? In the guide, I have a written explanation of what that means, and then there's also associated videos explaining all of that. I guess my question to you is, did you go through that whatsoever? It's going to be able to explain it way better than I did. I mean, I literally have multiple video lectures on it. I have written examples of it. I guess if you go through that and you're still confused, I'm happy to try to do my best to answer. But I have a feeling that you didn't either pay attention to that or didn't even know that that was there, but there's a reason there's a Discord guide in the Discord. It's to answer those basic questions to get us all on the same page. And all right, we're basically back where we were in minute 3 of the day. Well, that's a bummer. All of that work we did this morning just to get murked by the EU update. The EU update. Can you trade NQ on public? Public does not have futures contracts. It does not. But also, I wouldn't recommend that anyone starts trading futures with their own futures account. I would say start with something like Apex or Take Profit Trader, just because the way there is stock trading, the way there is options trading, the way there is crypto trading, futures trading is its own thing. So there's some nuances that you're definitely going to want to learn about it. Is there a paper trading platform where you can exercise your bot that has open API? Yes. Well, the paper trading platform would just be the brokerage, and then you would choose to run the bot on whatever brokerage. So you would basically just say, hey, execute these trades on this paper trading account rather than your like real funded account. But also, I don't know what you mean by exercise your bot. I assume you mean like using your bot, and the answer would be yes. You just have to tell it to execute the trades on the proper brokerage, on the proper account within the brokerage, and just make sure you're using your fake one, your paper money. What are your go-to sources for breaking financial news on Twitter? I tried Zero Hedge, but there is way too much extraneous news. I use various ones: Walter Bloomberg, Financial News. I look directly at True Social now because you have to with Trump. There's a lot of bot accounts on X that are somewhat fast. Nothing's going to be as fast as what the big money managers are getting. Like I assume their data bill, their news bill is like many, many thousands of dollars a month. Where there's a real money in DeFi rate arbitrage bot, there's like a spread of like 6 to 50% between markets from lack of liquidity. Yeah, I mean, some people take advantage of it. You have to be really careful, really, really careful there, because if there is a lack of liquidity and the bottom falls out, you're screwed with all your positions. You have to be very careful playing that particular game. Generally, if something sounds too good to be true, it is too good to be true, especially in the world of trading. Like, if you think that there's some sort of like easy money grab opportunity, I guarantee you it does not exist. There's no such thing as easy money in this game. And if there is easy money or evident strategies or something like that, it's already arbed away. Like, all the other people are going to start trading it. Everyone's going to start trading it, because if it's easy money, it's easy money. So before you know it, there's so much competition that edge is then lost. If you get screwed by a bot trade, does that mean you got bought? Yeah. Matt, do you have Bloomberg Terminal? No, I find there to be no point to having Bloomberg Terminal. There's a lot of bots that actually just scrape the data from Bloomberg Terminal and then give it out. So, I mean, it's not cheap to have a Bloomberg Terminal subscription. It's actually kind of noteworthy how expensive it is. So right now there's a lot of companies and services that pride themselves on being better than Bloomberg Terminal at a much more reasonable price. Can you call out the call to put ratio? No, the call to put ratio is pointless. It is absolutely useless because, for example, let's just say, a call to put ratio would be 1-to-1 if someone has 10 calls and 10 puts. Like, just go through this hypothetical with me. 10 calls, 10 puts. Okay, it's 1-to-1. It's equal. It's balanced. But what they don't tell you, what the put to call ratio doesn't take into effect, is how far away is it? The gamma and the delta influences really, really, like, the gamma and delta influences on price are going to be massive if you're close to at the money. While the put to call ratio doesn't capture that. If the calls are super, super far away, their delta and gamma influence is pretty much nothing. While if the puts are at the money, it might have a huge influence. While vice versa. The distance away and also the time really matters. So the distance away would be captured in the delta, and the kind of the time aspect is going to be captured in gamma, because gamma ramps up the closer to at the money you are, and also the closer to expiration you are. So people really get like caught up trying to look at the put to call ratio, and it's honestly pointless. It really, really is. You can have a put to call ratio of whatever value. Just pick up a ratio. It could be 1-to-1. It could be 2-to-1. It could be 1-to-2. It doesn't matter. And it could mean massively different things. You can have a very, very bullish or bearish call to put ratio of 2. You can construct it in that way where the ratio would be the same magnitude, but it would mean a massively different thing, because what matters is you have to consider the moneyness of the situation and also the time. So if anything, it would be better to look at like the current delta and gamma setup. And that all comes back to the example that I literally just gave you. If your calls are at the money and they're about to expire, that has far, far more impact on what's going on with current price action than it does if your calls are super far out of the money and there's a long time till expiration. Like it just, I don't know why people are so obsessed with the put to call ratio. And also on top of it, I mean, I could go on forever about this, but is the open interest, are they sold calls or long calls? Are they sold puts or long puts? The put to call ratio, it just shows you the current open interest, but it's very, very different if people are buying a bunch of puts and that is the put open interest versus they're selling a bunch of puts and that's the put open interest. So for the fact that it doesn't give you clarity on whether being long or short those options, that's why it sucks. It doesn't take time into account and it doesn't take moneyness into account. So for various reasons, looking at the put to call ratio, it's not going to give you shit, dude. It really won't. It's I forget who it looks like. I think Mikey, you answered that or you asked that question. The put to call ratio by itself, not knowing the other details, is why it's absolutely useless. Absolutely useless. I hope that makes. Is there any questions about that? Because I know put to call ratio, people kind of, I don't know, like they like to feel smart and fancy and they're like tracking it, when in reality, if you look into it, you're like, what the fuck? Like it's pointless. Wait, hang on. We just got an update from Foxconn, who is the manufacturer for Apple. Foxconn sent the highest amount ever of iPhones in a month, worth $1.3 billion from India to the US ahead of the Trump tariffs. That's crazy. $1.3 billion worth of iPhones. And look at that. We're right back up into that chop zone that we were before they fucked us up. That's 10, Jesus. Oh, man. So, if there's any questions on why you shouldn't use the put to call rate, well, okay, I should clarify. You could use it, but you also then have to get other questions answered. So, yeah, you basically just need more detail when you're looking at put to call ratio than just the pure put to call ratio. You don't know if they're long or short, and you don't know the moneyness. You don't know about the time. So that all basically, you don't have an idea of delta or gamma, and you also don't have an idea of the actual positioning, the aggressiveness of it. And then, so if there's any questions on that, fire. And if there's any questions on Apex or Take Profit or Sim to Funded in general, feel free to fire away as we're waiting to see if the market can recover here. Just my quick little spiel on why everyone should consider using sim to funded trading, whether it's for futures or if you want to use options, you might want to look at something like Vanquish. Obviously, what you guys just saw me do this morning of where I made my 25K right here, I made 20K on Apex, I made 5K on Take Profit, 20 plus 5, that's the 25. I used Apex and Take Profit for futures, and then I used Vanquish for options. This whole thing, it's called sim to funded. So here's what you do. You sign up and you take a test. You're in the eval stage. The test is basically, can you hit a certain profit without suffering a certain unrealized drawdown? If you hit that profit before hitting that unrealized drawdown, you pass the test. You go from eval to performance. When you're trading, motherfucker, something just got announced. What got announced? I have no fucking clue. Is Trump popping off again? Yep. Our farmers are great, but because of their greatness, they are always put on the front line with our adversaries such as China. Whenever there's a trade negotiation, or in this case, a trade war, the same thing happened in my first term. China was brutal to our farmers. I see patriots to just hold on, and a great trade deal was made. I rewarded our farmers with a payment of $28 billion all through the China deal. It was a great transaction for the U.S. until crooked Joe Biden came in and didn't enforce it. China largely reneged on the deal, although they behaved during the Trump administration, only buying a portion of what they agreed to buy. They had zero respect for crooked Biden administration. Who can blame them? Interestingly, they just reneged on a big Boeing deal, saying that they will not take possession of fully committed to aircraft. The USA will protect our farmers. Okay, I'm surprised the market reacted as much as it did, because this doesn't really have like a policy update in it, unless there's something else that just happened. This is the only thing I'm seeing right now. So the markets are reacting, but he's basically just saying he's going to protect our farmers. Yeah. So the market reacted and quickly bounced back up, because I'm not seeing any policy. It's not like I'm increasing tariff. Like, we're not seeing actual. It's him basically just calling out China, but it doesn't seem as if there is, he's basically saying how great he was in his first term. He struck a deal, China backed out, Joe Biden didn't do anything, and he's here to protect our farmers. Like, I'm not saying, hey, we're increasing tariffs or we're not going to negotiate. Like, I don't see like a true policy change here. But obviously the markets reacted pretty aggressively on that True Social to begin with. Where was I? That was a little bit of craziness. Coming back to the SIMDA funded. So what you have to do is once again, you take a test, the eval stage. You pass the test by hitting a profit target without suffering a certain unrealized drawdown. I'm putting an emphasis on unrealized because that makes it pretty difficult. A realized drawdown and an unrealized drawdown are two very different things. And obviously your unrealized drawdown can very rapidly be larger than your realized drawdown. So please understand, the drawdown is based on your unrealized number, which generally is larger than your actual realized, or at least it's equal, but it's never below it. Anyway, you pass the test and you go from eval to performance. When you're on a performance, that's when you can start making money. So performance right here, PA, performance account, performance account, performance account. And then at take profit, it's called a pro. That's their equivalent of a pro, of a performance. So when you're on a performance, you keep trading. And then if you trade well enough over a succession of days and follow the rules, that's when you can get legit payouts. Thus far this calendar year, I've been paid $2,500 from take profit, which that's my first payout from them, and I know it's not that impressive, but hey, I'm proud of it. Helps me pay off some of those test fees. And then from Apex, I've been paid out $200,000 from successful payout requests. So year to date, I'm at $202,500. So I made $2.5K from take profit, and I literally just got that money yesterday or today or something. And then I've made $200,000 from Apex. So basically, you're trading on these sim accounts, and if you do well, and follow all the rules, upon following all the rules, you can request out money. And I'm here to tell you that if you follow the rules, yes, you can get paid out a shitload of money. So I'm kind of just getting my legs under me and figuring out the best way for me to trade with the take profit rules. Like I said, not all of these guys have the exact same rules. They're very, very similar, but there are some like nuances that it does change your trading style a little bit. And then obviously what's complicating it is absurd volatility just like this. I mean, hell, you could have been in a pretty solid recovery trade right here at 1042. You're like, okay, we came down, VWAP bounce. Maybe you go long at 19,012 right here. That's a beautiful trade. VWAP bounce takes out the EMA. You're looking for strength. Great. You're holding it, and then all of a sudden you see this, maybe you didn't move up your short, and then just boom, out of nowhere. This only took, look at this. This is 1046.17. This is 1046.19. This took 2 seconds. The NQ contract dropped from 53 to 69 in 2 seconds. In 2 seconds, there was an 80-point move. That's $1,600 per contract. So if you took this short, congrats, because you just very quickly made it. But if you were long, you just saw your account move by $1,600 in 2 seconds. In 2 seconds. And seemingly, it had really nothing to do. Talking about good bots and bad bots, This kind of shows how shitty some of the bots out there are, because this has nothing to do with actual policy. There was nothing that Donald Trump said in this update that should be impacting the market, because he's just basically calling out China. And once again, there's profitable bots, there's good bots, and then there's shitty bots. And I would say that the bots that just ran on that picked up the news, did some natural language processing. They saw that the sentiment was negative and they thought, let's go short. When you go short into a low liquidity environment, that's how you can move $1,600 in 2 seconds. You're basically just creating an outsized position when there's not much liquidity. And that's exactly what happens. So I guess coming back to the conversation we had before was, I don't really have an issue with bots. I just have an issue with these shitty bots that don't seemingly know what the fuck they're doing. And we kind of got proof of that, because on this first sell-off at 1017, guess what? We bounce all the way back up to it. On this sell-off right here, guess what? We're already bouncing all the way back up. So inherently they're getting it wrong, and the market is telling them they're getting it wrong, because we dropped, bounce all the way back up. We basically ate up that entire drop. Same thing's most likely going to happen here. We dropped on seemingly nothing. The bots overreacted, misinterpreted the news. Their sentiment gauge is just off apparently, and then they're wrong. But if they're in and out that quick, they don't give a shit, because they made money. They're probably already out of the position 10 times over, maybe thousands of times over. I got liquidated on that flush. On micros even, I can't participate like this. On micros, you got liquidated? I mean, were you trading a big chunk of them? These moves are big. And Chris, I'm there with you. I'm also having a very tough time in this environment. That's why I'm seemingly just getting my ass handed to myself, which is why I was a bit more aggressive in taking out the profits from Take Profit when they offered it to me. Because I was like, dude, if I can have some money, I'm going to lock it in for sure. But this is a sobering reminder of why you want to have your stops in, because random things like this happen. So my biggest tip to all of you is, as soon as you're enough in profit where you're like, okay, this is kind of going my way, put that stop at break even, because you never know when random things are going to be said, and you don't want to get flushed out. And then all of a sudden, let's just say your stop is arbitrarily on the chart and it's not really at a key level you care about. And it might just get arbitrarily hit. You could have been in this beautiful trade at 9 or 1042, riding it all the way up. You're looking good. And let's just say your stop was just here. Well, you literally just got wicked out, and then you would have already been back in profit if you just had waited a couple extra seconds. Or really, it's just an unlucky thing. So my biggest tip is, in this environment, first of all, size down. Leverage is going to kill you. It really will. So first biggest tip is size down. Second tip is, when it goes a decent chunk in your favor, put your stop at break even, because that's how you're going to somewhat protect yourself from random ass movements like this. And sometimes those are going to hurt you. And other times, let's just say you were arbitrarily short, you just made a ton of money. So maybe you want to have your profits there too, because this could theoretically help you. You never know. It's not like all the news is bad. I mean, look at last Wednesday, the news update, it just ripped, absolutely ripped. So it can cut both ways. It's not like this is all bullish. It's not like this is all bearish. So my biggest tip is size down. And it doesn't matter if you're trading options, equities, futures, crypto, as soon as you're a decent chunk in profit, and based on whatever your system is, put that stop at break even. It's going to be so much better for you. What are your thoughts on running a bot for mean reversion around the 2 standard deviation VLOP, along with a few other indicators to help guide out the news? Am I crazy? No, I have a strategy that's effectively very similar to that, and it is definitely a profitable strategy. I'm a fan of it. I found there, just a little tips, the other indicators are very important. Exclusively trading it of just, are we above or below that VWAP? I had a really tough time making that work. I had to integrate or include some metrics from a couple other indicators, and that's where I really started finding success. That mean reversion methodology, it really is good. It's not necessarily psychologically, I'm just not a mean reverting trader. I'm in no way bashing it. I know many people who are mean reverting traders and they make a lot of money. I'm in no way saying that it is bad. I'm just saying it doesn't fit the best with my personality. My personality is much more of a trend following trader, and I'm looking for the trend to continue. And that's why when I pitch to you guys, I'm always like, we're going fishing. That mean reverting, it's a different mindset. And for me, It just doesn't resonate as much. I find that I'm much more attracted to trend following trading than I am mean reverting. But once again, I want to make it clear. I'm not bashing mean reversion. I'm just saying it's not necessarily for me. But yes, you could trade it. You could trade it well. You can make a shitload of money. I know a lot of people who do it. It's just not my cup of tea, if you will. Not my cup of tea. Bollinger Band goes with that. I mean, remember, all these indicators, if it's just based, like if you're using technical indicators, RSI, MACD, Bollinger Bands, all that stuff, it's all backwards looking, all of those, because all of the math in those has to do with the previous price action. So like you have to ask yourself, should all of your trading and indicators and basically all of your methodology be based on something that's already occurred? Doesn't necessarily have forward-looking capabilities. So especially with this like massive spike in not only options trading but zero DT trading, as a retail trader without insider information, unless Nancy Pelosi is paying attention to the show right now, the most evident tool we have at our disposal that has something of like a forward-looking capability is options. It is options flow. By definition, options are forward-looking. That's the entire point of options. That's why I spend so much time looking at what the hell's going on, because all of these trades, as the delta's going up, as the delta's going down, all of this is traders telling you what they think is about to happen. Because if you're placing an option trade, it's a bet on something occurring in the future. So I'm not saying don't use indicators. Indicators are good. And if anything, I find technicals are a really good way for you to know where your major risk points are. Basically, when you're like, okay, I'm wrong, time to throw in the towel. And whatever, if you want to use RSI, MACD, my major statement would be know the capabilities of the tool that you're using. So if you're using something like MACD or RSI, all it's telling you is what's just played out. That's all it's telling you. And obviously, maybe you find some edges of like, hey, RSI on this particular equity, when it gets above 90 on the daily, it seems to revert and you find some sort of edge. Okay, cool. That's totally reasonable. I've seen stuff like that. But understand that pretty much all the math involved in that stuff is just backwards looking. It's literally just telling you what price has just done, not what it's about to do. So what I would say is you want to integrate that type of stuff where like, you're like, you know what, man, I love MACD and I want to use it. Okay, cool. I would say integrate that, something that's backwards looking, but also integrate something forward looking like options and look at the delta flow or the linear regression of the delta flow or something like that. Like you kind of want to mix and match, but I find that a lot of people, they find that one indicator. They're like, okay, I watched a video on YouTube and I saw this guy talking about bull flags, and I am using bull flags with MACD. And it's a good place to start, but it's not going to get you a place where you're like net profitable. Nancy gonna buy me a PS6 for being a sugar mama with her gains. Maybe she will. Maybe she will. Fib retracement every now and then. I use 50%. Fib, same thing. All these things, RSI, MACD, Fib, I'm kind of indifferent to them. I've seen many times where they work, and then there's people who swear by them, and then there's I feel like they work as often as they don't. I find that technicals, like charting and indicators, I find their best utility is for you to have your measured risk point, for you to be like, this is my line in the sand, and if it breaches that line, if we cross that line, you just have to admit you're wrong and throw in the towel. I find the best utility of charting and technicals for you just to have a good anchor point where if things go awry, you're not holding on to the play for too long. So I'm by no means bashing them. I'm just saying, if there was something as basic as RSI is the end all be all indicator, we would all have infinite money. So the fact that it's just out there and people are so freely talking about it, and yet 95% of traders still lose money, it kind of tells you about the capability of any individual very popular indicator. It just doesn't. Clearly, there's something else going on in the game than just using one end all be all indicator, because the numbers don't match up. At this point, the indicator that don't do anything to prepare you to lose money, the Trump indicator, has no rules. No matter what indicators I use, the most important thing has been a good, tight stop loss. Yeah. I mean, we've spoken about this before, but one of the most fascinating papers I've ever read as it relates to trading is they found all these professional money managers who, for one reason or another, they identified as good quality traders, as in they had a track record of beating the overall market, outperforming the market. And what they did with these traders was they never allowed them to enter any position. They were given positions that already existed, and then they had to manage it. And that's how this entire research played out. Is like they would manage it, and then every so often they were just given another random position. Might be in the money, might be out of the money, like whatever. They could never enter it. And yet all of the quality money managers still were net profitable, which actually tells you potentially more important than your trading strategy is your risk management. Like, folks, like, really appreciate what I'm telling you. They were given random positions. Imagine right now I just told you, okay, actually at Palantir, you're going to be short at 96, and MicroStrategy, you are long at 318. They were given positions, and yet they all were able to manage it in such a way that they were actually net profitable. How do you do that? You do it with top tier risk management. So maybe before you get like all hell bent on like finding the perfect strategy, which remember, no, there's no such thing as a perfect strategy. I would actually argue your risk management is, if not, it's definitely as important as your actual trading strategy, but I would actually argue that it's more important. Like, because remember, the market is just normally distributed, as in the next bar, the next 3-minute bar, the next 10-minute bar, the next 15-minute bar, 50-50 shot of being red or green. 50-50. So if you're pretty much playing a 50-50 game, how are you net ahead in a 50-50 game? Well, you're net ahead by minimizing your risk and maximizing your reward. That's what, like, if you're flipping quarters against me and we have a 50-50 shot, the only way you're going to be net ahead is if I pay you off more than you pay me off when I'm right versus when you're right. You should understand that pretty much every single trade you have, half the time you're going to be right, half the time you're going to be wrong. It's between 60 and 40, plus or minus 10%, but we'll just call it 50-50 for the sake of this conversation. It's going to be very difficult for you to change it beyond that. So with that in mind, as a good, reasonable base case, first of all, mentally prepare yourself for understanding that about half your trades are going to be wrong. About half. Like, and of course, different strategies, like there's some nuances and you can change some knobs over there. But what you really want to do is minimize your losses and maximize your returns. That's the math of how you'd be net profitable. Matt, you said you would kiss a guy for some free Texas Roadhouse. Would you cunnilingus Pelosi for it too? I mean, if she's paying, why not? Winners bigger than losers. Yeah, your average win size and your average loss size are very, very important. What price range you looking for? Oh, I don't think that's for me. I still prefer Schwab's precious software. Schwab? I would not be using Schwab. Wait, Schwab bought Thinkorswim. Are you talking about Thinkorswim? Thinkorswim is decent software for sure. If that, I think Schwab bought it, right? Wasn't there like that was a big acquisition? They bought it from TD. So Thinkorswim was first owned by the guys from Tasty Trade. That was their first thing. Then they sold it to TD, and then I think TD offloaded it to Charles Schwab, I believe. They sold Thinkorswim. The first iteration of Thinkorswim sold for like $600 million or something. It was like they sold it for a shitload of money. Did you get your free Bloomin' Onion yesterday? I didn't, but ideally this weekend. And we are, look at that. We are almost back at where we were before the second piece of news today, which was really kind of a nothing burger. Tesla's up 1.5%. Netflix, dude. Netflix don't give a shit, man. Netflix is where it has been at lately. All right, very quickly before I go, like I said, shout out to Apex. Use that code Goonie to get 80% off. If you want to trade with someone else's money and lower your risk, but yet you still have that potential reward of if you trade well, you can get very serious payouts. Apex just restarted their deal. You can get 80% off with the code Goonie pinned to the top of chat in the description of the video. And before I go, I just want to show you guys the options flow. Here's a look at the 30-second. The Mag 7, pop, drop, pop, now going sideways. Looking at the S&P 500, looks crazy. Huge drop on that piece of news that the EU talks, or the talks with the EU, are not going well. And ever since then, we've been trying to recover in a very volatile fashion. Coming back to the key levels, these are the key levels of the day. This is the transition zone between 5,410 and 5,390. Above it, I would say the bulls have a better shot. Below it, I would say the bears have a better shot. We opened up right on top of the zone. We pushed all the way up to the start of my second profit level between 5,450 and 5,460, this 10-point zone. Then we got hit with news at 1017. We puked all the way back into the transition zone, hit yesterday's closing value. We popped all the way up to the key open interest level, back down in the transition zone, popped back up to the key open interest level, came down, tried to start grinding higher. Then we got this update from Trump at 1046, or at least the one that the bots reacted to. Then we puked very quickly, and we're now just battling it out at this key open interest level at 5425. I'm looking for this support ideally to hold, and then I would want to see a retest of up here. If it doesn't hold, surprise, surprise, then we're just talking about roughly this zone again, this 10-point zone, or really this overall transition zone. Things were looking good today until 1017. That announcement from that someone apparently from the EU side was saying that the talks with the US aren't going that well. That's why we puked. And then this puke here at 1046 was very seemingly a massive overreaction to this true social update from Trump, where he really didn't say anything. So I find that all a little bit confusing. But overall, that's what I have for you right now. I appreciate you guys stopping by. I appreciate all the good vibes. I'll catch you in the next one. Peace.